Well, let's get across the market open. Henry Jennings joining us from Markets today. Henry, happy Thursday to you. Let's start in the States because it was all about Nvidia overnight.
It was. Good morning, Andrew. Yes, it was all about Nvidia. The market was waiting on tenterhooks for the Nvidia result, which came in, I guess, slightly better than expected. It was certainly an upbeat presentation, of course, by Jensen One. The stock was up around 3 or 4% after hours, slightly easier in normal trade. Sales, they're talking about in the fiscal second quarter, which runs through July, of around 45 billion. But he did have a bit of a pop at Donald Trump in some respects, talking about the ban on those H20 chips, really crimping their growth, I guess. And, when you look at Nvidia, it actually has only just turned positive for the year in terms of market performance. He did talk about, global demand, incredibly strong, etc. But clearly those US trade restrictions are having a bit of an impact at the moment for Nvidia. They did make that write down of 4.5 billion, and he said they did lose around $8 billion in sales due to that export ban. So it's not all sunshine and oranges by any stretch of the imagination for Nvidia. The market, as I say, slightly better after hours. That has helped the Nasdaq, which is up around 130 odd points last time I looked. The Dow only up around 12, and we had our SPY down 4. So I'm not expecting huge things from our market today. Maybe a little better than yesterday. Yesterday was pretty disappointing given the run that we saw in the US market. But I guess that Japanese bond auction did take a little bit of the gloss off our market yesterday, which led to, I guess, a little bit of underperformance in the US as well. So not a lot to go on, as they say, and all the best jokes. But at the moment, steady as she goes, Nvidia will be a slight positive to the US market. Having said that, we had some HP results, which were, well, they beat forecasts, but unfortunately their guidance was pretty soft and the stock was down quite considerably on the back of those results. So I guess it swings and roundabouts here.
Well, it is indeed. Also, we had Salesforce out too.
Yeah.
That was seen as, in fact, benefiting from that strong cloud spending, I guess, that continues.
Yeah.
All right, let's focus then locally. Now, not a lot about. Look, we have had Champion Iron. I don't know whether you've had a look at those numbers.
Yeah, it was interesting, wasn't it, Champion Iron? I guess, iron ore stocks have been hurt, and we have had the iron ore price coming under pressure again. That $100 mark gave way, and it's sort of around $95 now, US a ton. So that has really changed things. But we did see Champion out this morning, and really record sales there. Earnings grew by 44%. Earnings of 127.4 million over the quarter. Sales volumes hitting 3.5 million metric tons. And this was despite some challenging weather. Of course, Champion Iron is in Canada. So, we do see from time to time some inclement weather in Canada, to say the least. A weaker Canadian dollar as well. So, there's a number of factors at play here. But I have to say, a 10-cent half-year dividend, which I don't know if that's going to keep the market happy, but certainly, the pricing pressure on the iron ore miners at the moment is well and truly out there because of the price of iron ore, and Champion has fallen a fair way from around $6 back at the beginning of the year to around $4.30. I'm not sure this is going to be enough to perk them up given the headwinds they're facing in the iron ore price. But certainly, it does show that you can still produce record sales and a good result even when iron ore is down, as long as you can get the stuff out the door and get record production out as well.
Still in the mining space, some news from
Yeah.
Resolute Mining. It's actually, look, it's had its issues, hadn't it? Certainly as far as what its CEO was detained in Mali. It's
Yeah.
also picked up a couple of gold projects off Anglo Gold as well. What have we heard from Resolute?
Well, I guess, it's just once again reinforcing sovereign risk, which is something that we don't really have in Australia, which I guess highlights the benefit of being an Australian project as opposed to a West African project. But there were rumours going around yesterday that it had been knocked back on some of its mining permits, and the stock, certainly under a little bit of pressure yesterday. They have said this morning they've not received formal confirmation or communication from Guinea relating to possibility of exploration permits being revoked, which is despite media reports. So I guess, that's a slight positive. Stock has been on a bit of a charge due to the gold price, but, it's once again reminding us of the sovereign risk that accompanies gold and other resource projects in West Africa. There's obviously, they're much cheaper in some respects to bring to market, a much quicker, less red tape, and a very eager and willing workforce locally. But it does carry sovereign risks, and we've seen that with Mali, and now it's raising its head in Guinea as well. So, for investors that are looking for gold exposure or any resource exposure, you just have to bear in mind that sovereign risk all the time, and it is out there. And certainly West Africa is one of the harder places, as some of the Resolute directors found out when they got detained in Mali. It's certainly one of the harder places to do business, I guess.
Henry, how are you viewing the gold space at the moment? That gold price managing to hold on, isn't it?
Yeah, it's annoying. It is annoying. I lightened my gold load a little bit earlier this week and late last week, just to take the top off. I have been a bull of gold, still am a bull of gold long term, but I just thought it may have run a little bit too far. And with the push back of that tariff talk with Europe by a month, I guess that took some of the risk out of the system temporarily, at least, and I thought we would see the gold price under a bit of pressure. But in actual fact, the gold price has come back very little, which is somewhat annoying. And in Aussie dollar terms, it's pretty steady around that sort of 51.30, 51.40 level. So it's still pretty elevated. And what else we're seeing, Andrew, which is quite a big factor, is we're seeing a lot more M&A. We saw that deal the other day with the Laverton mine from Focus Minerals. We've also obviously got Spartan, that merger continuing to play out. And then we've had MAC Copper, gold and copper are inextricably linked as well. So there's a lot of M&A going on at the moment. And, I think that's only going to increase. Gold miners generally are chock full of cash. And in some cases, it's cheaper to go and buy a project with someone who's done all the work and done all the drilling than it is to actually start from scratch, and the time it takes to do that. So with all this cash, I think we're going to see increased M&A activity, to say the least.